Hello, everyone. Good morning, and trust you're having a wonderful day out there. As usual, you know how we do it. Let's confirm that we are good to go before we dive into the chat. So, if you can see my screen and you can hear my voice clearly, please type in hi in the comment section, as this will give me a positive feedback that we are good to go this morning. All right, I would like to see some feedback, please. If you can see my screen and you can hear my voice, I would appreciate some feedback. So let's see what we have in the comment section. Okay. All right. Oh, 7148325. Good morning to you. Thank you very much. KXY, good morning. Hey, Scott Benji, good morning to you. Glad to have you around. How are you doing today? I have HB. Hi. Okay, good morning. I hope that I'm not sure what you mean by goody. Okay. 5010008. Much love to you too. Thank you very much. Scott Benji, good morning to you too. All right, so let's take this as a positive feedback that we are good to go this morning. And it's on this note I welcome you all to yet another promising session on the X Trend Speed Live. My name is Sheriff Daramola, and for the next 1 hour, I'm going to be your host as we are going to be taking a technical dissection of the current market structure in anticipation of the New York session today. Well, it has been a mixed reaction in the last 24 hours across the market pairs, and except for the US oil and the GBPUSD, which we didn't do yesterday actually, we have seen that market has been subdued for quite a while. Okay, I got a feedback that there is an echo. Scotch Benji, okay, thank you. Let me do some readjustments in that regard. Thank you for that positive feedback. Okay, let me see right now. How about now? Please let me know in the comment section if things are good. Okay, all right. Okay, I can see Carrie. Carrie says it's good. All right, thank you very much, Carrie. I didn't know you were around. Glad to have you there. Okay, so it has been quite a mixed reaction in the last 24 hours, as majority in the market are anticipating the handful of macroeconomic events coming in from the UK and the US docket for today. So we are going to be looking at that and how we are going to be taking advantage of a trading opportunity in anticipation of this event and following the event too. And also we have positions that are running currently, and we want to see how we are going to be managing this position during the live session. So my advice is that you stay tuned in so that you don't miss out on any of the ideas we are going to be talking about here today. I promise it's going to be quite an interesting one today. And secondly, for those who are joining us for the first time, you are highly welcome on board, as what we simply do here is to come together as a community in anticipation of the New York session every day. And at the beginning of the week, we have series of instruments that we have chosen, and throughout the course of the week, we continue to do a follow-up detail on this commodity or currency pairs, whichever case it may be, ahead of the New York session on a daily basis. At first, it might look a little bit overwhelming since this is going to be your first time with us, but trust me, be patient and stay tuned in, and I promise you, with time with us, you will get to understand how this works, and you will be able to use the information you have gathered here to make your individual and independent decision on your portfolio. So once again, you are welcome, and on this note, let's dive right into the business for today. So as usual, the first thing we normally do is to go into the economic calendar, as we want to keep tabs with the fundamental aspect of the market, as this helps us to position ourselves and at the same time give us a better timing of taking advantage of a potential move. And since the macroeconomic events are always serving like a catalyst to help us drive price movement. We definitely want to be aware and know when they actually happen so that we can actually position ourselves ahead of this event. So what we simply do here is focus on high impact event affecting the currency pairs that we are monitoring. And so for today, Tuesday, May 16th, we have from the UK docket, we have the claimant count change and the ILO unemployment rate, which actually happened earlier today, and the figure was promising, and it was a mixed reaction anyway, though we had a positive variance on each of these events here. And the GBPUSD, the pound chart, as did a immediate reaction to that, which we are also going to be looking at today, since we are monitoring the GBPJPY for this week. Then later on today, I think in about 2 hours from now, we have the retail sales coming up from the US docket, and this index is released by the US Census Bureau, and it measures the total number of receipts of retail stores for the month. And this gives us a reflection of the rate of change in sales in the US economy, as it gives it's a major indicator of consumer spending in the US. And generally speaking, a high reading is always seen as something positive for the dollar, while a low reading is seen as negative. So from the data we have here coming in from the previous month of March, we have minus 0.6%. and we have a consensus projection of 0.7%. So there is a general opinion that it's going to be a little bit more positive based on some indicators that was taken into consideration. So we are going to be looking forward to what the actual data is going to be like for today. Will it be just as expected, below expectation, or just beyond expectation? So this we shall be seeing, and in fact the anticipation of this event, we shall definitely be seeing it on the chart as price action. Then later on today, we have something coming in from the Japan's docket, and that is the GDP, which shows the monetary value of all the goods and services and structures produced within the Japanese economy between the first quarter of the financial year. So this is one other event majority will be looking forward to. And from the data we have here, there is a general consensus of 0.1% as against the previous data, which came in at 0%. So there is a general perspective that there are some level of positivity to the Japanese economy. So we are going to be looking forward to see what the actual data is going to be like too as well. And since we are monitoring the GBPJPY, definitely we want to see how the market is going to be anticipating this event today. So these are the high impact event we are having for today. So let's go right into the chart and let's get prepared for the New York session today. So as usual, the first commodity we normally take on is the US oil commodity. And for the last 24 hours, it has been quite a profitable trade on the US oil spot, as you can see here. So let's run through how the week started for us and what was the basis and what was our conclusion during the live session yesterday as to regards to how we are going to be taking advantage of any trading opportunity in this market. So the first thing we saw here at the beginning of the week was how price action started on the bearish note at around the $70.15 level, as we had that area as our resistant line since we saw selling pressure from that area. Then we saw how price action dropped into the $69.35 level, after which we begin to see some buy pressure resume around that zone. So the $69.35 level happened to be our support line for the week, and since then we have seen our price action had continued to find higher highs in this market. Now, with the flat channel we identified here yesterday, we agreed that we are going to be having a buy stop order just right above the $70.15 level, where a breakout of that structure will give us our first buy position for the week. And a couple of hours, I think during the live session, we had a buy position already, which was running during the live session. And I also mentioned here during the live session yesterday that if price action continues further to break out of the resistant line of that descending channel, a retest of structure will give us more opportunity to add more position to our existing trade. And to further guide this expectation, we also identified this key level at the $70.40 area. So we said breakout of the $70.40 and the breakout of the resistant line is going to be giving us an opportunity to buy. And since then, you saw how the first position here moved about 160 pips in our favor before this whole bearish momentum began. Then the second, if you had missed out on the first one, the second position here also moved about 130 pips approximately before the bearish momentum began in this market. And I hope you all moved your stop loss accordingly to lock in some profits. You know how we do it here. As soon as price action moves significantly well in our favor, we definitely want to be moving our stop loss to lock in some profit. And if you have done so, you must have been taking out of that sell buy position at this point with about approximately 100 and 150 pips if you are taking the two positions that we had there. So with that being said here, let's see what is going to be our expectation for this week. And for those who still have a sell position running, for those who still have a buy position running, well, I would advise you to move your stop loss right now, and anywhere around the $70.80 level seems most appropriate to lock in your profit at this particular point in time. So with a well secured position right now, and that is for those who still have a buy position running, let's go right into the 4 hours time frame so that we can see things from an holistic point of view as we get prepared for the New York session today. So going into the 4 hours time frame, there was a little tweak I had to do this morning after monitoring how participants in this market has been reacting to that current structure we have here. So for the sake of clarity, and for those who are not part of the live session on Monday, that is yesterday, let's quickly run through the perspective we saw here on the 4 hours time frame. So right here on the 4 hours time frame, what we did here was to take into consideration trading activity since the beginning of the month of April, and it is quite obvious that price action has been bearish, and as a result of this, we connected the series of lower highs as you can see here and the series of lower lows, which gave us this descending channel that we have here. And it was on the basis of the descending channel we have been making our decision in the last couple of weeks in this market. Now, there is something interesting that happened around the structure during the, hold on a second, I want to take this one out so that things will look a little bit more clearer for us. So I will just, okay. So I think it will be better now when we go back. Oh, beautiful. So now something interesting happened during the course of last week's trading session, where we saw that at one point in time, we saw how price action broke out of the resistant line of that descending channel. And then we saw some breakout a couple of times, and then price action dropped back below the resistant line again during the later part of last week's trading session to drop below the resistant line. And with the situation we had here this week, we saw the bullish momentum breaking out of the resistant line one more time to push price to the upside. And what I did this morning was to project this trend line into the future to capture how price action has been reacting to this level since the second half of last week. So we had another new trend line here, which definitely is going to be part of what we are going to be using to guide our trading activities going forward. So now let's zoom into the current structure. So what has been going on here since the later part of the New York session yesterday. So now you would notice that as soon as price action got into the $71.38 level, which also shares a confluence with our trend line. We saw how sellers came in to negate the bullish momentum, though the week has started on a very strong bullish note. But as soon as price got into the $71.38 level and the trend line we identified there, we begin to see how sellers negated the bullish attempt, and this has lasted for about 5 about 20 hours now, roughly about a day now. We have been seeing the multiple rejection of this area. So at this point in time, this level is going to be serving, in conjunction with the trend line, is going to be serving as our yardstick for trading activity today. So there are two perspectives we are going to be looking at based on this current structure. So let's first of all talk about the potential of the sellers in this market. Obviously, it has been a very strong bearish move since the beginning of last month. So it is very likely that sellers could still take over this market at any point in time. So let's look at the potentials of the sellers around this area. So one thing I'm looking forward to here, following the impulsive move we saw at the beginning of the week, coupled with the continued selling pressure around the $71.38 level, we might likely be seeing price action drop further to the downside, hereby respecting that trend line one more time to incite a sell-off in this market. So what this simply means is that as long as price action remains below the $71.38 level that we have here, we continue to feel comfortable in our sell position and look out for more opportunity to add to our sell position. So that is the sell perspective in this market currently. However, if price action at any point in time breaks out of the $71.38 level, which you can see here, and also it shares a confluence with the trend line we identified earlier, then at this point we are going to be seeing this as a bullish signal. Remember, we are not getting too excited at this point, as we still need some confirmation to happen before we are going to be joining that bullish move. And remember, it's a very strong bearish momentum here. The breakout of that structure could turn out to be a false breakout. So that is why we will need a confirmation that will prove that buyers are gradually gaining that momentum. And this will reflect on the chart in the form of price action doing a retest of the structure. It could be the retest of the $71.38 level or the trend line that we have here, where the appearance of buy pressure on our lower time frame will give us the confirmation to be part of a bullish move. And we also have a structure at the $72 area, which was a very significant level in the last couple of weeks in this market, which if a breakout of that level also happens, we will have no other choice but to add more position to our existing trade. So this is the holistic perspective on what we are going to be looking at on this chart. So let's dive right into the lower time frame. Let's see how participants in this market has been reacting to the structure since the beginning of today, and also if we can see or identify a simple setup that we can use to guide our trading activity for this week. So moving down into the 1 hour time frame, this is what I was able to spot out on the 1 hour time frame. Now, if we consider the continued rejection of that structure and the trend line there, it appears price action is gradually transitioning into a reversal pattern in the form of a head and shoulder pattern. So we had the left shoulder here, we had the head, we also had the right shoulder with a very sharp a sharp shooting star candle, as you can see here, which from a technical standpoint is a sign that reveals the presence of sellers around this area. And you all know that whenever we identify a reversal setup like this, the next thing we want to be doing is to identify the neckline of that reversal pattern, which I was able to spot at around the $70.91 level. Now, for this reversal pattern to be valid, we definitely need that neckline to be broken to the downside, though we had some breakdown here in the last couple of hours, which for me isn't very satisfying actually. As you can see, we have something that looks like a hammer candle where the price action resumed back into the $70.91 area. So let's see how this is going to play out. So most importantly, what we want to be looking out for here is a breakdown, and when we scale down to our lower time frame, we want to see retest of structure, signs that buyers are finding it difficult to climb back above the resistant line, that trend line there. Then we want to be part of a bearish move to the downside. And there is a caveat to the setup here. If you remembered yesterday, we acknowledged the key level at the $70 area, which happened to be around that resistant line at the beginning of the week. It now depends on how price action reacts to the structure that will determine if we are going to be adding more sell position to our existing trade or getting ready to buy. So as soon as price action gets into the $70 area, that is, if we do have a breakdown retest of the $70.91 area and price action gets close to the $70 area here, what we want to be doing is to move our stop loss accordingly to lock in some profit, as we want to see how price action will be reacting to this level. So if a breakdown of the $70 happens and retest of structure, then we want to be adding more sell position to our existing trade. But if instead of breaking down that level, instead we start seeing buy pressure resume above the structure, then at this point we want to be part of a bullish move. Breakout retest of a reversal pattern on our lower time frame should trigger a buy position, and the tendency of price action breaking out of that resistant line becomes higher at that point. So this is how we are going to be trading this if price action ever drops below the $70.91 level. Now, in as much as we're looking out for selling opportunities in this market, we also want to consider the potentials of the buyers in this market. And considering the fact that buyers have been gaining some momentum since the beginning of the week, there is a chance that we could have a breakout of this whole choppy situation that we have been witnessing here in the last 20 hours in this market. Now, for us to buy the US oil spot for today, what do you think we can see from this current structure that will give us the inclination that buying momentum is now becoming stronger? Well, personally, what I want to see here that will make me buy the US oil spot for today is for price action to break out of this trend line that we identified on the 4 hours time frame. And if you look at the trend line there, it also shares a beautiful confluence with that $71.38 level. So a breakout of both of the structure will be a very beautiful signal for us to be part of a bullish move. Now, when the breakout happens, remember, we are not getting too excited, as we want to see a confirmation to happen, as the breakout of that trend line could turn out to be a false breakout. So we need to see a confirmation that gives signs that buyers are gradually gaining momentum, and this would reflect on the chart as a retest of the structure, that is the retest of the $71.38 level, or the retest of the trend line, where the appearance of buy pressure will give us an opportunity to buy. And with the buy position triggered there, we want to have a buy stop order above the $72 area, where a breakout retest of that structure will welcome more opportunities to buy the US oil spot in this market. So this is what we shall be looking at on the US oil spot for today, and I hope that you get prepared and be on standby to catch any of this opportunity that will be happening today. And to make things a little bit more simpler, you might want to screenshot my screen so that you can use it as a reference point when you're about to make your individual decision. So that is that on the US oil spot for today. If you do have any questions, feel free to let me know right in the comment section. So I can see Liberdate, good morning to you, thank you very much. 509, good morning. Valeric, how are you, Valeric? Good morning to you. All right, so in the absence of no questions, I want to assume that we're on the same page here, and on that note, I will be moving on to the next option. So the next option we are going to be treating this morning is going to be the US Tech 100. Now, on the US Tech 100, we had a very simple setup we identified here on the 1 hour time frame just right yesterday, and it falls around hold on a second. Okay, it was just right within the 13,300 and the 13,390. So it was just right above our key level at a 13,300. And one thing we agreed here yesterday is that we are going to be selling. So we had a structure here actually. Initially we had a structure, and the appearance of this sell pressure during our live session yesterday suggested that we might likely be seeing a bearish move. And one thing I stated here yesterday is that we want to be having a sell stop order below the 13,350, where a further breakdown of the 13,300 level will welcome more opportunities. So we had a sell stop position triggered actually, and price action moved about 55 pips in our favor before this bullish traction began again. And I do hope you moved your stop loss accordingly to lock in some profit. As we saw, as soon as price action retracted, we saw buyers continue to push price to the upside. And also remember yesterday also I said, if a breakout of the 13,390 level happens, which happens to be our resistant line of that channel we identified at the beginning of the week, then definitely we want to be part of the bullish move. So if you had missed out on the first position right here during the later part of the New York session yesterday, the market gave us a second chance this morning to be part of that move, as we saw price action breakout, retest of that structure to inside an engulfing candle in this market. And for those who took advantage of this buy position right here, you will currently be running with about 27 pips in profit. And my advice at this point is that if you are still in a buy position on this trade, you want to be moving your stop loss to your entry point to secure the current position, as anything could happen from this area. And the reason why I have said that we want to be moving our stop loss is simply because of the continued selling pressure we have been noticing around the 13,435 level since last week's trading session. As you can see here, every time price action gets into that area, we continue to see sellers negate the attempts that buyers are trying to push through the ceiling at the 13,435. So because of this all continued selling pressure, we need to be very, very cautious around this area. So what we want to be doing, secure your current buy position, and let's see how price action will continue to react to this level. Now at this point in time, though I have a buy stop order just right above the 13,435, above it, as I want to see a breakout of this area, taking out all the sell position within the zone to give me a confirmation that buyers still have the potential of pushing price to find new highs in this market. So a buy stop order around that area seems much reasonable around this area. So that is how I'm going to be looking out for more buying opportunities in this market. So let's see how price action plays out as regards this bullish expectation in this market. However, if price action does the opposite instead, that is, if it finds it difficult to break out of this resistant line, then a continued selling pressure will probably incite a sell-off in this market. Now, before we talk about the selling expectations here, I want us to look at the 4 hours time frame together to see how things have been playing out from an holistic point of view. Now, if you look at this whole structure since I think the last week of the month of April, it is quite obvious that price action has been very bullish in this market. And look at what we have here. We have connected a series of higher lows. We have a bullish trend line which has consistently been respected for the last 2 to 3 weeks in this market. And then in addition to the trend line is this key level had a $13,300 mark, and this level had been a major determinant of price action in the past. If you look at the beginning of this month, we saw how that area was a very strong selling niche in this market before the breakout of this level happened during the course of last week's trading session. And since the breakout of that level, we continue to see how that 13,300 area continued to serve as a strong buying niche for participants in this market. Now, for me to sell at this point, I would rather see price action break down the bullish trend line, that is the trend line should be breached to the downside for me to start seeing a sign that sellers are probably going to be pushing price for the to the downside. A breakdown retest of that structure on our lower time frame will be something that we are going to be looking at to join this move to the downside. So we have a structure here had a 13,390 which we identified on the 1 hour time frame. So a breakdown retest, you can see the retest will also be sharing a confluence with that trend line around that area. So let's see how this is going to play out. If it does happen, we have no other choice but to start thinking of selling from that level. So let's go back to our 1 hour time frame. I just needed to show you the importance of the structure from an holistic point of view, so that when I'm discussing here on the 1 hour time frame, we can be on the same page. Now, like I said, we are not going to be looking for selling opportunities unless we have a breakdown of the 13,390 along this. So breakdown, retest of structure, continued selling pressure will be an opportunity to sell. Then we also have a structure at the 13,300, which will definitely be welcoming more opportunities in this market if price action ever breaks down that level. So these are my views here on the US Tech 100 for today. Let's keep tabs with this. Let's continue to monitor price action and look out for more opportunities here. So with a brief recap of just what I just explained, we are looking more for buying opportunity above the 13,435 level around here, and then we are looking forward to selling opportunities just right below the 13,390. Okay, I think I'm having network issues right now. Let's see. Okay, we are back live again. We had network issues, so we got it resolved. I'm so glad to be back with you again. I hope you can see my screen. I hope you can hear my voice. Please confirm in the comment section so that I can know. All right. So like I was saying earlier, I was trying to do a summary of what I just explained on the US Tech 100. So I said here that we are going to be looking out for buying opportunities above, more opportunities to buy above the 13,435 level there, and we are looking for selling opportunities if price action breaks down, retest the 13,390, which also shares a confluence with the bullish trend line that we identified earlier. So that is that on the US Tech 100. If you have any questions, feel free to let me know in the comment section. So moving on now, we are going to be diving right into the XAUUSD, which is another interesting pair which has been going through a very strong chopper situation in the last 24 hours in this market. So let's quickly run through what our expectations are looking like. Okay, Moise82 says that he or she is only hearing a voice. Please confirm right now. I just please kindly confirm if you kindly confirm things are fine now, Moise. Kindly confirm things are fine now, Moise82. Can you see my screen? Okay, please let me know in the comment section so that I can do adjustments if necessary. All right, so like I was saying on the XAUUSD, The week has started on a very choppy situation here. Okay, thank you very much, Moise, too. I really appreciate that. Thank you. So since the beginning of the week, we had this whole situation here where price action has actually been choppy, and one thing we saw here is that price has been ranging just within the $2020 area and the $2008 since the beginning of the week, and this is a clear sign that majority are still very indecisive of what the next line of action is going to be. And if we consider the high impact event we are looking forward to featuring from the US docket today, I told you about the retail sales, which is coming up in about 2 hours from now. This could probably be a sign that majority are waiting for the actual data to come in to decide what the next line of action is going to be in this market. However, we still had the privilege of having some positions that we could take advantage of actually. So let's look at what really happened yesterday and what was our decision during the live session yesterday. So we saw this whole situation, and during the live session we were around here. Where were we? Okay, we were around this area, just right around the $2014.50 level. This was where we were during the live session, and I told you yesterday that I'm leaning towards a bullish momentum actually, but we said we want to see price action to break out of the 2020, and remember I told us that we are not going to be getting too excited as we need a breakout of the 2020 and the trend line of that descending channel we identified here on the 1 hour time frame. So for the sake of clarity, I will zoom out so that you can see the trend line I'm talking about. So at the beginning of the week, we acknowledge that price action has been within a descending channel, which you can see here, and we had the resistant line of that descending channel here, where I said I wanted to see a breakout of that trend line. If it so happens the price action breaks out of that trend line, it will be the first time price will ever break out of that structure in the last 1 week, and it could be a very good signal that price will want to be going to the upside. But as you can see what happened during the New York session, though we had price action come into that region, but we didn't see a breakout of that structure to let alone think of looking out for a retest of that level. So that actually negated the potential around that area. Now, since the bullish momentum was negated at that point, we acknowledged the fact that price action was looking bullish since Friday last week. Then we connected a series of higher lows to give us this temporary bullish trend line, which I will call at this point. And we also said here yesterday that if at any point in time the trend line is breached to the downside, we are going to be preparing ourselves for selling opportunities. So we had the trend line broken during the early hours of today. Price action came back to retest the structure, and I said something here that if price action ever breaks down the trend line, we are going to be using the $2014.50 level to guide a bearish move in this market. So if price drops below, breaks down, retest, we have a sell stop order below that structure so that we can be part of that move to the downside. And that was exactly what happened here. As you can see, price action broke down the $2014.50 level, moved about 120 pips in our favor before we begin to see the buy pressure around this area. And for those who still have a sell position running at this point now, it's appropriate that we move our stop loss to secure the current sell position. So anywhere above the $2010 area seems most appropriate to lock in some profit as we look forward to more opportunities at the breakdown of the $2008 area. So in the last 5 to 6 hours now, we already saw price action break down the 2008, which happens to be the support line for the week. Remember, this was our support line at the beginning of the week, and we already have the breakdown of that structure right now, though price action came back into that level. So with the breakdown of that structure, we want to have a sell stop order below the 2008 so that we can join the move to the downside, and a further breakdown of the 2000 will welcome more opportunities in this market to sell. So that is what we are going to be looking forward to. So we're still looking forward to a bearish momentum here. And since what we said yesterday is that as long as price action remains below the bearish trend line, that is the resistance line of that descending channel, we shall feel comfortable in our sell position and look out for more opportunities to sell. So let's see how things are going to play out from this structure in this market. And one possibility we also could happen here that we also want to take into consideration is the fact that price could still come to as far as the trend line one more time to retest the structure or the $2014.50 level, where continued selling pressure is likely going to incite a huge and massive move to the downside. So let's keep all this perspective in mind as we continue to monitor this current market structure. Now, in as much as we are looking bearish for the XAUUSD today, we should not ignore the potentials of sellers, of buyers too as well. And if we look at the structure closely, what are the potentials of buyers in this market? What do we want to see on this chart that will make us feel comfortable to open a buy position in this market? Well, personally, it's quite simple enough. As you know, we have a structure already mapped out that we are going to definitely be using to guide this move. And that is the resistance line of that descending channel that we have here spotted at the beginning of the week. So as long as price action remain below the trend line, we've agreed that we remain patient and comfortable in our sell position while we look out for more opportunities. But if at any point in time during the New York session today we have this trend line breached to the upside, then at this point we want to start considering buying the XAUUSD. And in this case scenario, considering the fact that price action has been bearish, we don't want to jump into a buy position outrightly. So what we want to be doing here is to remain patient after the breakout of the trend line happened. And with the look of things here, the trend line also shares a confluence with that $2014.50 level. So if price action breaks out of the trend line, this will be the first time price action will be breaking out of that structure. Now we want to wait for confirmation to happen, which will come in the form of a retest of either the $2014.50 level or the trend line here, where the appearance of buy pressure on our lower time frame, something like a double bottom structure, inverse head and shoulder pattern, or a falling wedge comes in. We just want to see something that supports a bullish momentum and something that says that sellers are losing the momentum to drop back below the resistance line of that descending channel. And if that is going to be the case, then a buy stop order above the $2014.50 level should be welcoming a buy position in this market, where a further breakout of the $2020 area will be welcoming more buying opportunities in this market. So these are the things I'm looking at for today. So as long as price action remains below that trend line, that is the resistance line of that descending channel, we shall feel comfortable in our sell position. So let's see how things plays out in the next 24 hours, and definitely we shall be coming back here tomorrow to review how well we are doing. So we already have a sell stop order triggered right now around this area. Let's hope that price action will continue to find lower lows in this market. So let's see how things plays out. You might want to screenshot my screen so that you can use it as a reference point when you're about to make your individual decision on this commodity. So moving on right now, we are going to be talking about the what's the pair we talked about here yesterday after the XAUUSD. Let me see. Okay, so we went on to talk about the GBPJPY, which was introduced to us by one of us here. And let's see how the GBPJPY has been doing in the last 24 hours, I think. Okay, so I'm yet to add it into my watch list here. So let's look for it, and then GBPJPY. Okay, so we are going to be going into the higher time frame. Let's look at what our expectations were during the live session yesterday, and what we saw and what we thought could happen. So From the daily time frame, we saw how price action has been bullish in this market actually, and price action consistently respected those pivot lows. So we connected it to give us this bullish trend line that you can see on your screen. Now, in addition to that bullish trend line, we were able to spot a key level at the 168.00 area, which happens to be a very significant structure, and it has also been a major determinant of price action in the last 1 month. As we saw initially, it was a very strong selling niche before we saw the breakout of the structure happened on the last trading day of last month. And since then, after the breakout happened, we have seen how this level had been a very strong buying niche in this market as it continued to negate all attempt by the sellers to break down that level. Now, when we scale down into a much more lower time frame, we were able to spot a trend line which we said we were going to be using to guide our trading activity for yesterday. So the first one is the bearish trend line, which we said a breakout retest of that trend line will definitely give us an opportunity to be part of a buy position. And in addition to that one is this trend line we had here, and I told us all yesterday that if for those who are taking advantage of that breakout of the 170.00 area, I said here that hold on a second, let's see. So we had the breakout of the structure just prior to the New York session yesterday. We were trading above that level, and I told you that if you missed out on the breakout of the 170.00 area, that we want to remain patient and wait for price action to come back and do a retest of the trend line to incite another wave of bullish momentum. And if you look at what happened about 4, 5, 6 hours ago, we saw our price action came back to retest that confluence between the 170, the bearish trend line, and the bullish trend line, giving us a very beautiful sign that buyers are still very strong in this market. As you can see, this hammer candle that evolved after the old price action on the lower time frame. So this situation we have here still makes it look a little bit more bearish for us. And remember what we said yesterday, that as long as price action remains above this bullish trend line, we shall feel comfortable in our buy position while we look out for more opportunities to join the trend continuation to the upside. And the other perspective here for selling momentum is that we only sell if price action drops back below the bearish trend line, retest of structure, or the retest of 170, where we start seeing signs that buyers are finding it difficult to climb above the 170. Then at this point, we want to be part of a bearish move, which is yet to happen at this point, and that is the only reason why we are going to be considering selling in this market. That is a breakdown of the 170, retest of structure. That is the only way we are going to be selling the GBPJPY this week, which I doubt is going to be happening. So let's scale down into the 1 hour time frame and let's see what has really been going on here. And for those who had missed out on this opportunity, what is going to be our plans going forward? So right now we are on the 1 hour time frame, and currently price action is trading just right within our range we identified yesterday between the 170.500 and the 170.00 area. Now we have this whole situation running right now. We have a price action retesting the trend line. So if we do some readjustment here so that it suits the current structure, so I will be bringing out my line chart now and then readjust this one to suit the current structure. Then when we bring back our candle chart, we should be having a good alignment with this. So I'll bring this a little bit to capture the wicks, so we can see it's a perfect retest of the trend line here. So at this point in time, if you had missed out on this opportunity, well, we have no other choice than to remain patient, waiting for price action to break out of the 170.500 level to trigger a buy position in this market. So if you had missed out on this ones here, then the other juncture for more buying opportunity is the breakout of the 170.500, retest of that structure, after which we want to be part of another wave of bullish momentum to the upside. So that is how we are going to be adding more position to our existing trade right here on the GBPJPY. Now don't forget that I said here that the trend line that we have here is the one that we are going to be using to guide our trading activity for the later part of this week. So let's keep this in mind, as a breach of this trend line is likely going to send price crashing to the downside. So let's be on standby so that we can capture any of these potential moves as price action is being monitored. So that is that on the GBPJPY for today, and I think we still have some time, so let's take on one more random pair and then we call it a day for today. So I will be taking on the USDJPY to complement the instrument that we are monitoring for this week. So right now, let's go on into the daily time frame, or is it the 4 hours time frame we should go into? Okay. So I think we should go into the 4 hours time frame. Yeah, the 4 hours time frame seems most appropriate. Okay. So on the 4 hours time frame here, what I did on the 4 hours time frame, remember this pair, we have been monitoring this pair for quite a long time now, and we already had structures which gave us a privilege of taking some profit home on this one. And one thing you would observe here since March of this year is that price action has been bullish in this market, and to further emphasize the strength of the buyers in this market, we have the pivot lows connected, giving us this resultant bullish trend line that you can see on your screen right now. And you can see how price action had consistently respected that level, and even till last week's trading session, we saw how price action came back into that area to retest it and push price to the upside. Now there's one interesting structure on the 4 hours time frame which I want to call our attention to, and that is the reversal pattern that happened since the beginning of this month. So we saw this impulsive move at the beginning of the month, bringing price back into the 133.450 area, as you can see here. Then we saw price climb back into the 135.300, and another drop happened. And what we saw here was that price was unable to break the previous low, and for us this is a sign that there is a bullish momentum gradually building up behind the scenes. And whenever we have this kind of structure, we are already anticipating a potential reversal pattern in the form of a double bottom structure. Now we have price drop back, climb back up into the 135,300 area, as you can see. And you know what we do here, whenever we have this potential reversal pattern, the next thing we want to be doing is to identify the neckline for that reversal pattern, as the neckline is going to be a platform that will confirm the validity and potency of that reversal pattern. So we have the neckline situated at the 135.300, which also was a very strong determinant of price action in the last 1 month in this market, as you can see here. So we had a neckline area, and if we look at this from a technical standpoint, a breakout of the neckline will definitely confirm that reversal pattern. And as you can see, last week trading session, we saw our price action broke out of that neckline. Now there's something interesting going on in this market since the beginning of this week. As you can see here, we have been witnessing selling pressure around the 136.400 area since the beginning of the week, which is looking like price action is gradually transitioning into a reversal pattern. And this might likely be a form of inciting a retracement of that impulsive move that happened, probably into the neckline area at the 135.300 or the structure around the 134.750 before another wave of bullish momentum will happen in this market. So these are possibilities that we are going to be looking at, but in order to have a better perspective into what is really going on here, we want to scale down into a much more lower time frame, like the 1 hour time frame, where we begin to see how participants in the market has been reacting to this current structure. So scaling down into the 1 hour time frame, this was what I was able to spot here since the beginning of this week. Now we saw our price action started the week on a very strong bullish note, breaking out of the 135.700 area. Now, despite the breakout of that structure, we saw how the 136.260 was negating the bullish attempt, hereby giving us the highest point where price action has been for this week, and at the same time that level is serving as our resistance line. So we have a simple setup as a result of this whole situation. Price action is trapped within a range between the 136.260 and the 135.700 area to give us a flat channel. And you all know what we look out for whenever we have this kind of simple setup. We want to see price action to either break out of the resistance line for buying opportunity or break down of the support line for selling opportunity. Now, before we go into the details here, I want to call our attention to this trend line I was able to spot at the beginning of the week along this level. So since Thursday of last week's trading session, I connected a series of higher lows to give me this bullish trend line that we have here, which is definitely going to be serving as our yardstick for trading activity for this week. So at this point in time, as long as price action remains above that trend line, we shall feel comfortable in our buy position. And one interesting thing about the trend line here is the fact that it also shares a confluence with that 135.700 area, which happens to be our support line for this week. So it now depends on how price action reacts to this level that will determine what our next line of action will be. Now, with the situation of things, price is dropping back into that area, as you can see, though we had some couple of sharp rejection of the 135.700 a couple of hours ago. So let's remain patient at this point. Let's see how price action plays out. If price action breaks down the 135.700, then it would have broken down that bullish trend line, and the breakdown of the bullish trend line is likely going to be a sign that we might be getting ready for the beginning of that retracement phase I was talking about on the 4 hours time frame. So a breakdown retest of the structure on our lower time frame should be giving us a confirmation to be part of a bearish move to the downside, and the potential of a bearish momentum here has a tendency of giving us multiple entries in this market, as we also have another structure at the 135.300, which was our neckline on the 4 hours time frame. So if it happens that that neckline is broken to the downside, we are likely going to be seeing more opportunities to sell. However, if price action gets into the neckline here and we begin to see buy pressure, then the appearance of a reversal pattern here should give us an opportunity to buy the USDJPY. So what this simply means here is that if we at any point in time cite the breakdown and retest of the structure to give us a sell position, as soon as price action gets into the area around the 135.300, we want to ensure that we move all our stop losses to secure the position while we wait out and see how price action will react to this level. It depends on how price action reacts to this level that will determine if we are going to be adding more sell position or getting ready to buy the USDJPY. So that is my view here for any sell position on the USDJPY. So we are looking forward to price breaking down that structure to confirm a retracement move to the downside. However, if that does not happen and instead price action continues to find higher highs, then I already have a buy stop order above the 136.260 with the hopes that a breakout of that structure will welcome an opportunity to buy. So I'm looking forward to buying opportunities above the 136.260 area for today. So let's keep this in mind. Screenshot my screen so that you can use it as a reference point when you're about to make your individual decision for today. So it's on this note I want to call it a day here. It has been a wonderful moment, and I'm very sure you are all well equipped to be able to take advantage of any trading opportunities today during the New York session, as we were able to simulate all the possible potential of the current market structures that we are monitoring so far this week. So I can see Sergio, good morning. 799, how are you doing? So that is that for today. And for those who are joining us for the first time, I hope you are able to catch one or two things in this market. And trust me, as you continue to be with us, you get to understand how this works, and you will be able to use the information you have gathered here to make your own decision in the nearest future. So on this note, I wish you best of luck during the New York session today. And remember, we have a high impact event coming up in about 1 hour 30 minutes from now. So ensure that all open positions are well secured by moving your stop loss accordingly. Do have a wonderful evening, everyone. Bye bye.